for us today. Today is Monday, August the 20th. We've had a little bit of a tight action event. A couple of interesting things. Scanning through Twitter. You know, I might be a cynic, but WLK, Westlake Chemical, you can see them in the background, they announced that they are increasing their dividend by 150%. So I think to myself, why would a company do that? Except to draw investors into the stock, right? I mean, seriously, if your stock is doing well, your company is doing well, you want to reward your shareholders. Do you actually spike it by 150%? And then, you know, what happens a quarter from now? Here's what I would guess. I'd be looking for some insider selling. Living in the game. I gotta tell you. It might be nice for a little bit of a run, but I would be extremely careful there unless we can find some news that says, hey, listen, there's something materially significant in the way that WLK runs its business that will make it much more, profitable. There you go. Today, nothing much. Chicago Fed came out. Pretty much a non-event. And of course, we've got bills, the bill auctions. But again, 4 week, 3 month, 6 month, not usually big movers at all. Tuesday is going to be also very, very light. Wednesday, we start with some things. And, these are Fed guys, so I don't know if they will say anything that might be of interest. But FOMC minutes, Wednesday's going to be a little bit of a tough day, perhaps. And Thursday going to be a pretty good chance that we'll have some movement in the bonds. I don't even know if that's going to matter for us, but there you have it. Okay, let's jump into the charts. Please access the blog for longer time frames so that you can see what we're looking at in more entirety, in a greater fashion. Okay, so very, very quickly, we are here at a double top event. You know, double tops usually have some pullback associated with them. There are a few things that don't, like Apple running through 644 like butter. If you look at it on an hourly chart, it looks like butter. And so that is maybe a little bit of an anomaly, but by and large, everything does look like it's time for a little breath. We are 4% away from the ES50 on the daily. That's kind of big, right? Yes, I have moved the CCI back. You know me, guys. I'm always studying, always looking for that one thing that can give us that little edge in some place. And so after many months of being away, the CCI is back. Don't worry about it unless I call your head to it. What I am trying to see is what can we establish from these CCI mountains. And there's actually a lot that we can see, right? So reintroducing it there, notice how even this movement is here. That means strong, solid momentum. You can see that mirrored in the SMI, flat upward trending, but again, these things are very, very high, right? These are really high numbers. Backed off a little bit from the early morning when I was looking at things, certainly, but we've got ourselves a little bit technical divergence. Notice this, right? Slipping off a little bit, but still holding in a trending territory region. I don't really see anything going on right yet. If we have one more dip down, I would say that we are off to test the 50. Now, it might not be the 50 on the 4-hour, but it certainly is going to be some 50. Why is that? What is this? What the heck is this? Okay, that's an anomaly right there. What? I have no idea what that's all about. Honest to goodness. No idea whatsoever. Okay, so here again, here's what we want to look at today when we look at our CCI and we watch ourselves go into double tops and we think to ourselves at resistance or support as identified by either a fib or a prior support resistance line. What's going on here? Here we have the crossover event. We've already started dipping down below this line, so we know we've probably got a pullback. When we pull back into these regions, the crossover event always means that we are dipping down into the moving averages, right? And sometimes it'll dip to the 30, sometimes it'll dip to the 10, sometimes it's going to dip to the 50, and sometimes it's going to fall all the way through. Notice this crosses the 0 line. And all of a sudden we have ourselves a little bit of negative action. Now, why is it that sometimes we hold the 50 on the 30 and sometimes we don't when we bounce back? It's because that 50 is not sitting at an important support level, right? The support region doesn't even look like it's there. It looks like it's here. 1413. Let's move it to 75. Give us one tick to hold the level. But clearly, looks to me like 1413. You know what? I don't even like that. Looks like the support region we need to watch out for, right? So, could be that we bounce. I suspect a little bit of a rollback today, right? Just my thing. I'm thinking that it's time to be a little rolly, as it were. And so that's what we're looking at. For the TF, okay, where'd my levels go? All right, we have a couple things we want to look at. First of all, we've got this wave, right? And then we have this wave. And of course, we've been seeing a great deal of retracement similarities through the charts. And so this has an 88 and this had more than an 88. Actually, if I move it to, what's the low here? 759.20. Yeah, it's still over 88. Most certainly, right? So this thing is moving into its own double top region. It's moved out of this range. So we're not going to take a look at that anymore, but we can see also we have a potential for an ABCD pattern. And so let's have a look at that. And I believe, yeah, that one's up there. So that one could put us all the way up there if indeed that's what that is. Now remember, ABCD patterns can stay valid just so long as this is not broken. So we could have all kinds of pullback and still hold the pattern very, very tightly. Something else that we could be looking at, though I don't really want to put this fib up here, I'll just draw it and then leave it pink, inactive, is a butterfly which actually terminates right there. at this level. So I'm going to turn this into a red thing. What? No. Silly girl. All right, so I'm going to put that there because that does show us a butterfly formation that could be extending into this region as well. There's a lot of stuff that says this ought to be a little bit of a rollover event. I certainly think it is. Let's move a little bit closer. You might be saying, all right, Emery, so what's the trade? Well, as always, take a look at where you've got major congestion. I got an email the other day and it said, I keep getting into the trades late. And so that's what my thought of the day today was based on. If you hear me say, hey, listen, this is a ride from da-da-da to da-da-da, and you wait around for 5, 6, 7 ticks, and you don't have the ability to go, okay, I'm going to move. You've got to be mentally prepared for the trade before you take the trade, right? You can't just hear me go, well, that's going to be whatever, and then you just go ahead and take it. You've got to be in a space where you go, wait, what does this mean if I take this trade? If you're not mentally prepared to take the trade that I have mapped out, don't take the trade. Just wait for the next one that you're mentally prepared for. If you find yourself getting in late or getting out late, it is because you're not mentally prepared for the trigger events. And that's okay. Just pick something that you're going to get mentally prepared for. The reason we react slowly is because we are not ready. All right? Nothing wrong with that. Just realize that that's the reason that that's there. And so you have to work on your mental preparation event to say, okay, well, all right, if I do that, then my stop is going to be here and I'm going to be here. And that's what I'm going to need to do. All right? So that's it for that. Here's this. I think relative support could be anywhere between here and here. Again, what do? We measure that midline event. Looks to me like right around there. Okay, so we miss it, we probably go to the bottom. We hold it, we probably get to the top. We have made a newer high, so that's pretty important. And let's take a look at a let's take a look at a closer event. 30-minute chart. Again, you can see here we have our evenness, and then we start stepping down. We lose this range in the CCI right here. And so that confirms the crossover here that says we have a nice short. Okay? And we run that short until we see the inverse of what's going on. We get this higher level right here. This begins to inflect. We have confirmation on both sides of that. So far, holding the level. We want to see a little inflection here. We want to see a bounce back up to there. But if it comes to the zero line and fails, we know we've got more of a negative trend sitting around there, right? So you've got to pay attention to that. Watch that one carefully. I like the TF if it loses this area to really come back into the congestion event. And that's about 50 ticks away. So I think there's a lot of action here potentially if we can get out of this very tight range that we're sitting in. All right, I need to turn this into a 15-minute chart. Alrighty, let's take a look at oil. A little bit of a messy chart. I do understand that. Let's see. Hmm. Okay. So let's take a look at this. If we take a look, hello? If we take a look at this potential formation, we have still a lot of upside momentum, right? This is an ABCD right here. And I think that that's pretty likely. This is the next level. Again, 97, 80 is the number I've been calling for a number of days. It's sitting here at the 200, caught very far away from the 50 on the daily. That's really far away. Oil doesn't really care about that in the grand scheme of things, so it may still continue upward into this region before the roll. If we want to take a look at the overall price action, again, here's an upward moving SMI, flat, holding in a good zone, the CCI, right? All of it above this 50 region, which is right here. So that's trending zone action, stays right there. When it begins to stair step down, you know that it's trying to head to a moving average. Now, which average is it moving to? Well, when we get that crossover here and we already start the step down, we know we've got ourselves a short. What could we be shorting into? Well, you know, that's the thing about oil. It leaves these congestion events and comes back to test them after it's made itself a nice little run. And this seems to be a nice little run. If we look at this wave, getting a little granular here, but if we look at this wave, and we say, all right, what's a natural pullback event? Natural pullback event should be somewhere between 38 and 61%. Right? 38.2, 61.8. So that actually, I think, is a pretty nice formation to look at. Let's save this drawing. Yeah, we'll save this drawing. Looks pretty good to me. I like it. Notice again. Simple things. See where the majority of the CCI is sitting. We know that that's a break in trend, right? If it's sitting all the way up here all the time, we know it's upside. If it's chopping around between 50 and negative 50, we know that it's in some kind of neutral zone. It pops up here, gives it a little bit of lift, pops down here, right? When the CCI is up here, but the SMI is still in the neutral zone, you're going to pay attention to the SMI, right? Anything that measures neutrality should trump anything else, okay? And so here we have some neutrality, certainly, but our slow SMI clearly giving us drift in terms of where it is that we should be going. See the volume mountain, not volume mountain, the same kind of mountain formation with peaks and valleys. We're going to look at the same sort of thing to help us see, well, all right, what's legitimate? We know when we roll like this, we're usually coming into a moving average. So where do you think that is? Could be down here, except for the fact that we have frontline congestion somewhere around this range. Yeah? Yeah. So, I would watch for that very, very carefully. See where the bounce action is going to be. If it bounces into a lower high, which is this zone, and it does not get into this area, you'll be great to take a continued short, right? Because the majority of action is saying, hey, listen, I'm in a negative trending zone. Quickly, we're going to look at short-term charts here. This is still caught in some kind of trending space, but certainly beginning to look like downside momentum. Neutrality right here in the fast SMI. So this being down here, notice the slope right here, probably pushing back into the midline of this formation that we're still sitting in. We did come all the way down here, which makes me think that this action is telegraphing that when we come to here, we're going to lose it and then make a lower level. That's what I think about that right there. All right, so notice we've got the same type of formation sitting here. We have this region that's been broken by this wick, dips us down into this level. Now, we know that just so long as we don't hit the midpoint of this congestion region, somewhere around there, and we've still got upside momentum. Problem is, here's lower highs and lower lows and a failure out of this channel. So if we take a look at the midline again, where heavy congestion has a tendency to sit when we have these sorts of channels, watch for the rejection zone here. It could be that this 50 is forcing it down into these lower levels, and so we want to watch for that carefully. If we see these lower highs, lower lows continue here, that's a breakdown off of this wedge and a move down to test the midline here. But that's a very nice move, right? 98 to 78, 20 cents. That's a bazillion bucks in silver and gold. So, bazillion being a technical term, of course. So I would definitely watch that. Some opportunities there that are fixing themselves up to be very, very nice formations. Look at this. All right, I haven't looked at this since right around here. So I find this to be very interesting. Broken level, but holding this range. So what we're going to do is say, you know what, this is the real support level. We're going to delete this drawing and hold it right here. Let's take a look at a longer formation. Oh, wait a second, what do we have here? 78. Oh yes, that is this formation that I was looking at, this extended butterfly, right? This is the region that we think it should get to. All of a sudden we're bouncing. Bouncing probably into resistance, right? Which ought to give us the little bit of pullback that we are expecting in the broad market. Because that is the target. You know what? You can look probably 2 weeks back, maybe to see that I've got this target here. So finally on approach, this bounce I find to be very unusual in the measure that it's going. So let's put a channel around this also, and we can take a... that's really kind of sloppy to do that, but... midline round and about this level right here. So let's see how this goes. This is very, very interesting here also with the ZB. I would watch for that, see how it does over that level. Very, very important. All right. Dollar. Okay, so the dollar obviously is moving ahead of the bonds, perhaps. Very interesting. At resistance, of course. Relative support sitting around here. If it's got upside traction, it should hold this level if it's got serious upside traction. If not, then you know it'll rotate down into this level right here. So I'd keep my eye on that. Euro. I don't know where my euro drawings went to. Euro's still in a channel, right? Looking lovely, actually, for this kind of formation. To the downside, interestingly enough, let's take a look at this. Not quite. Nope. A little too jagged. All right, so we're caught in the zone here. Major support right here. But look, we've got lower highs and higher lows, so we're forming some sort of thing that we can't really trade. You know, the more jagged your formations are, the less likely you're going to be sitting in a good trade. It's as simple as that. If something's jagged, you know what? Don't take it. Okay, here's what this is saying. See this uptrending line right here? Crossover right here. This is telling us that we have a strong likelihood of getting into prior resistance levels, which will begin right around here, 2320. Very, very interesting. Let's see. I know sometimes it peeves some of you that I'm always changing things around, but you're just going to have to learn to roll with it. You cannot stay the same in this business. You have got to be constantly adapting, constantly looking for the next edge. This is not a place for stagnation at all. If you decide that stagnant is how you want to be, probably not going to make a bunch of money in your lifetime if you're trading. Just saying. So, I know it's tough, but adaptation, big survival element for those of you evolutionists out there. All right. Look, here's what I'm talking about. Look at this 644. What resistance? Didn't even breathe through it. I mean, just went right off the top. Held it, maybe pulled back for 2 candlesticks on a really short time frame. But this thing is in a pretty monstrous move. Is this the right drawing set? Where are my drawing sets? Are all... Yeah, all right. So here we are at the top of this. 200% fib, 161.8. I see this as a reversal space also. It is pulling back a little bit off of this from a 30-minute chart. You know, what's the trade? Hey, listen, if it breaks down from the prior day's high, look for it to test the 50% fib. That's where the 15-minute high is. That's where the 644 is sitting at. That's where the 50 on the 30 is sitting. That seems pretty legitimate, right? If it breaks 648, probably going to go test 644. Just seems pretty likely, all right? If indeed it does not, and it's being driven up, I don't know what the volume is this morning, 80, 33, 20. Well, it's probably pretty good volume sitting in there this morning. Watch for the break over the 652 level. Right? That ought to give you pretty good price action up for a retest of the 654 level. Listen, this is extended. If you plan on taking this trade to the upside, could be very whippy on you, right? Especially since what we've done is make a high, fill a gap, and then pop into a lower high and reversing again. That's really telegraphing that the likelihood of me losing this prior high is definitely in the mix. I'm not calling any of you stagnant. I'm just saying I understand your displeasure with things changing because nobody really likes things to change. Regrettably, we are in an environment of adapt or die. So, there you have it. And I certainly don't want you to die, so here we are adapting together. For Amazon, this one really also pretty surprising to me. Look where the bodies are in this candlestick action. Could be a little tighter than that, but you know what? If we want to, what's the word? If we want to get super granular here, this could be a very, very tight. Look at that. Beautiful, right? Could it break? Look at this. See this price action here? What is this? Garbage, right? I know this is sloping down from here. Looks really great. Look at how much of the stuff is in the neutral zone. Things in the neutral zone, folks, you don't need to initiate trades in here if you're not quick on the trigger. If you can't say, wow, you know what? I see that I am losing. Whoops. I see that I am losing this 242 region. If it comes in here, I'm going to short it. I'm going to see if it can get to the bottom of the channel. That's only $2 away, less than $2 away, $1.50. So you've got to be extremely swift with your motion. If not, you've got to wait for it to break out of these congestion levels or to break away from these neutral zones, right? And one or the other in the neutral zone has to give you pause. When you see CCI formations looking like this, gotta be careful, right? Granted, if I pull all the way down here, I probably know I'm going to have bounce action, right? Because I am just absolutely savage in my movement. But if I come up here and I pop right over and I have another savage move, I should know that I am probably likely to have reversal there as well. Do you know what I mean? So just be super careful there. I do want to show you a couple of things. I think that Netflix is in a pretty good space to bounce. Yeah, flat moving average, but either it's going to fail this region, which was a breakout level that it retested, or it's going to pop and move to the upside. Right now, we can see the CCI is saying, hey, listen, we've got a little bit of action that's moving us, but we're in the neutral zone, so we have to wait for the break of price. In the end, it's all about price, all about support and resistance. And so really, if you never even looked at that CCI, you'd know, hey, listen, I got to wait for this thing to break down before I've got a valid move that's going to give me any kind of momentum. For here, looks to me like it's all the way to 64.50, right? So I've got about $1.50 of neutrality here I don't need to mess around with for Netflix. But outside of that, very nice price action. Baidu also, looking at, let's take a look at this on a 4-hour chart. We've got this, again, tight trending zone, really comes all the way to here, but if you're quick on the trigger, bounce off that halfway mark, going to be pretty, right? You can take an introductory long, and if it breaks out, awesome, right? This is not really telling us it's going to break out. What this is saying is, hey, listen, I'm very likely to move into frontline support. So if you are thinking about taking this long, I would recommend watching the break and saying, okay, I know I need to come back into this level. If I come into this level and I bounce back to the halfway point and fail, I've got myself a nice short. That's the ultimate event, because what you've done is given yourself a rotation that gives you a lower low and then comes back for a lower high. Remember, you've got to find the spaces where formations are holding. So if I have a high here and a lower low and a lower high and a lower low, for the pre-market event, the pull back here is going to be very, very pretty if it falls right from here. You could really take the introductory short if this opens up down into this level, right? That looks very, very pretty. Also, Google in a breakout space, but what I am looking at is extremely heavy congestion. Very jagged, but look, low, let's go here, low, high, higher low, higher high, higher low, lower high, higher low, higher high, caught very light price action here, a lot of stuff just sitting in the neutral zone right there for Google. Not sure Google is the right place to trade here today because I see a momentum drift. But if it comes down into 676 and fails, we know that we've got downside momentum taking us into this region. I think it's right here now. Right? Or potentially this region. If we breach our pre-market, if we breach our pre-market high, we know we've got upside momentum right there. Here's something else I want to show you. I'll be looking at AIG also today, and yes, my eyes will be facing the Facebook page because why, Anne-Marie? Why are you looking at Facebook? Facebook looks easy to trade. So why don't we go take some candy from some babies? That's horrible. All the ladies in the room are like, that's terrible. But here it is. Facebook below 19 bucks. You know, I gotta say, it's gonna be a trade down into 1871 and then 1831, right? It's got a clear breakdown action there. I mean, train wreck, really. Train wreck. What I would be very careful about is the snapback event. So the ideal trade, and let me, 927, yes, I can do it in a hurry. Here's the ideal trade for Facebook. All right, in my mind, the breakdown into 127.2, right? The pop up into the prior day's low and the loss of it. Yeah, that's going to be perfect, right? Totally what we're looking for. But if it breaks down, it pops, and it doesn't lose this, or you take the trade short as it rejects, but it makes a higher low, if it gets back up here to the prior day's low and starts hanging on, folks, don't stay in the trade. Get out and come back. You don't have to stay in there and get beaten with a stick. Right? You can get out and say, all right, maybe this thing's chopping around. Watch this. Right? Watch for the neutral zone infractions. If it gets football season, watch for those events, and then you can say, all right, I know what kind of trade I'm going to take here. Okay? Here's something very interesting. SPY. If we take a look at the daily on the SPY, we can see, yes, tiny bit of doji action above this high here. 42.21. Where is it? 42.30. 9 cents. But looks a lot like a place that we should reverse from. Right? Looks to me. I think that is really telegraphing a bit of a reversal. So what do we want to see? Let's take a look at the 4-hour chart and see this. Do you see this action here? The technical divergence? Right? The technical divergence here is saying, you know what? I ought to be drifting into one of my moving averages where relative support is sitting. For me, that's 141.30. I'm going to have my ears blown out in about 20 seconds. Let me turn this down. Okay, so that is something very, very interesting to me. I believe that this thing is telegraphing downside momentum. If it pops to the upside, it's got to breach the prior day's high, the overnight high, in order to see what that looks like. Right? That I think is very, very interesting. Also, the IWM. Remember we were saying, wow, or I was saying, it's crazy how strong the IWM or the TF is responding relative to the ES. When you telegraph back, though, and you look far back and you start looking at wider angle lenses, you're seeing that it's still underperforming the ES. Or the SPY particularly, right? It has not breached this event. Will it? Probably. But what are we looking for? We're looking for a retest of relative congestion. All right, so we've got price bars here. Let's see how it behaves in the first few moments over this level, right? If it holds it and pops, great. Notice, see all these moving averages here? See them? Listen, breaking them and holding a couple of candlesticks up here, who is that going to entice? That would be everybody. People trading the VWAP, the 50, the 10, the 20, the 30, and the 50. Okay? So being up above all these moving averages is going to entice traders to get long. What's going to be up here might have sellers sneaking around up here. So you've got to be really, really careful in this form or fashion. If we lose this 81.47, who is it going to entice? Going to entice those sellers. Have them all come in. People that trade simple systems from the break of support and resistance or the break above or below moving averages. All right? Pay attention to those sorts of things. I'm going to leave the IWM up. Popping action. This is what we really want ideally. Ideally, let's see a bounce into a lower high. If we have sideways action, that's going to be pretty cruddy. But a bounce into a lower high, going to be lovely. Do not trust the Facebook break at the open, unreliable. Where's this going into? Pre-market high. Man, this thing looks good. Breakout over here, that's a buy point. This is a buy point right here for Apple. You got to be swift on the trigger because you know what the 945 area looks like. Trigger came right at the open, started bouncing up. I am not taking this trade. A, didn't see it. B, a little uncertain about what it is that the market's going to do. Ooh, look at this. Certainly the range bar showing price action breakdown right here. See how pretty this stair step is? See how the CCI is holding huge levels? That's why you can take these longs. If you're swift and you're not looking at anything else. Most definitely. This Amazon short really looks kind of yucky. Very nice long. Break in the short from the Globex low. All right. You know, it would be awesome if we could have a couple of candlesticks. Okay, initial short triggering here in the TF. Support action, however, just about 5 ticks away. Look at this Apple move. Running. 654.36. Wow. That's a short continuing. All right. The ES not triggering any shorts right now, but about to, it looks like. It's got to lose this level on the range bars, and then ultimately that level. See how it did that, folks? Initial short triggering right there. 1 point below, it starts bouncing. That's why these range bars are here, guys. Right? That's why we look at the prior day's high-low. Look at this fib level. It's bouncing right off of that. Look at this. Wow. Missing the Apple trade. Crud. All right. I'm just going to wait and have a look at things. Opposing tails in the ES right here. Very unstable price action. Range bars sideways. All right, we have got to get some stuff going here. One of my other platforms is not even up yet. So I did something crazy that I hardly ever do. I totally overslept. Would you believe that? Totally. What is wrong with me? And no, I did hear the alarm. I just turned her over and went, oh my gosh, I've been asleep for an hour and 45 minutes. I've got to get back to sleep. So, been scrambling since before the break of dawn trying to catch up. So, trying to get, I don't have any idea why it is that I'm telling you that. No idea. But now you know. Hey, this afternoon, we are going to take a look at some stocks. Somebody said, why look at any other stock? Why not just stick with Apple? They have a point. Does Facebook have further to fall? One word. Absolutely. All right, here's something else. Do you remember, we've only played this one a couple of times, Cameron International. Cameron International is so hyperextended from its 50 moving average that if it loses 53.64, it's going to be a really pretty step down short to double top action, about 70 cents, but that's a lot of movement for those of you that have cash, right? That's a lot. A lot of movement. I am looking for AIG to do a little tumbling. Yes, I'm telling you everything. Okay, so to bring you in on the trials and tribulations, this automated system that we're running, has a great profit to loss ratio, right? It's like 6 to 1. The problem is it's got a 38 to 40% win ratio. Now, ultimately, the strength of the system is how long it stays in, right? And how quickly it gets out when something goes wrong. That's just not a percentage that you can work with. But here's the thing. When you build an automated system, nice, short, continuing in Amazon, if you went long Apple, take a break, take some profit. Right here, it's going to lose. Do you see this CCI? That's why I've got it up here in the range bars. Watch that. When you start seeing that step down, you know something is changing direction. Look at this. That's very heavy. It's very, very heavy motion. I do think shorting action is pretty. Right here, the loss of 14.13. I talked about that pre-market being the shorting action event. For these guys, definitely right here, we could see the break, right? We see the break, we take it. Here is the second break. Now, what we have to be careful about is, well, where are we going? Well, we should be going to the 127.2, but we just broke the Globex, so buyers normally lurk around the Globex low. So we're going to watch to see if we have any upside momentum that presses us into the space. Do you see Apple, folks? It does this almost every morning. It pops up. Enthusiastic buyers go, yep, it's time to go. It pulls back, often into support, and then, begins to rally once more. Downside momentum looking quite nice. Really, really, really pretty, actually. That's a breakdown. What do we want to see? If I want it to be absolutely steady in my trade here, I would wait to see this bounce and the retest up here. It could be that I'm a little jagged. It's still very early in the day. Hard to see what the rhythm is looking like. Wow, that's a breakdown. Way past my 74 level. Yes, Friday's, here's Friday's 15-minute low. There goes Facebook. There goes Facebook. Now I would like to see Facebook give me a bounce before I take it so I will wait for the retest of that event. Look at Apple. Amazon coming in to test either the 15-minute low or the either the prior day's low or the Globex low. ZB continues to climb. Yes, yes. Sideways action. Look at this. Wow, look at this test right here. We have this level sitting right on the blog as support. And there it is bouncing off of it. Where should we go? I have not initiated any new trades. Why? The rhythm has not been established as far as I am concerned. The only thing that's established rhythm today is Apple. And right now it's in a space that clearly I could say would be a little bit of a flat action zone. Dear goodness. Really. Guess what? We're going to change that right here. Oh no, please do not freeze on me. Okay. CCI divergence alerts. Please, please, please don't freeze on me, please. I'm not going to touch anything. Stop. Please don't freeze. Crud, the spinning wheel of death. Come on. This thing was acting up this morning. All right. So I was at the grocery. And I mostly go to the grocery to investigate. Otherwise, I have that personal shopper thing online because I don't want my carts to fall over or get stolen again. Crud. Crud, 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 crud. But I saw this stuff. It's called black water. And literally the water is black. I thought the bottle was black. I started drinking the water. I went, oh my gosh, this water is black. Who would buy black water? Come on. Guys, I'm going to have to force quit this. Oh no, listen. 2 shopping carts? No, no. No, no. 2, 3. Yeah, I hope they're saved too. 3 shopping carts, easy. Son of a gun. Or crumbs, as my brother would say. Oh, Excel is open. Crudley. Guess what's still going?